Oh, sorry about that, guys. 1 second. Not sure exactly what that was. Sorry, you guys. So, let's back up here just one. I only had read one thing. So, what is an option? We're going to just do a basic 101 on what options are. And we will have another webinar coming up in the very near future about selling options as well. But for now, it's just easier to start with buying. It's just easier to get a grasp on it. So what is an option? An intangible right to buy or sell by a trader to control 100 shares of a security. It expires on a specific date in the future. What are the advantages over penny stocks? Less capital for more gains. We also know that that is definitely going to bring higher risk on occasion, but that's only if you don't really understand the underlying concepts. So that's something here at PDT we're going to try to get everybody up on that level. It makes more sense once you know just the basic terms. So people usually get confused thinking you need more money, bigger account to play large caps, and the popular companies everyone knows and plays. When buying, you do have a defined risk, can only lose what you put in. Have good risk management based on account size. Options are very volatile. Now this, as it says, we all love volatility, which is why number 2 is important, to know your risks. I do believe that this is probably one of the hardest concepts for most day traders to grasp is the volatility. More liquid, more money going around in these plays. You don't have to worry about pump and dumps. So much money going through, not one trade or trader can knock down your position. If short is your strategy, shorting, or buying puts in this case, is an advantage in options. Goes back to number 2, you have a defined risk and only lose what you put in. Don't have to worry about a trade going against you and possibly owing money. Now, again, this is for buying options. Selling options is a completely different horse to ride, and we will get into that, like I said, in the very near future, hopefully within the next week or two. Number 7, playing respectable companies, not playing manipulated stocks. Why options? Here's an example for Facebook. The stock trade, buy 5 shares for $150 and sell $20 later for $160. So your profit being $50, a 5.3% return. The option trade on this same exact trade and timeline would be buying one of the 20-day 150 calls for $2. Sell for $4 in 20 days at the stock price of $160. Your profit is a 100% return, $200. And I will show some more examples about this. I believe we have one next right here. So this is a stock that I'm sure we're all very familiar with, Cron. So if you see here, 100 shares at $19.50 and selling at $21.50, that's a $200 for a full move. Best case scenario. The stock move is Cron went from $19.50 to $21.50. That's only a 10% move. $100 investment in the morning would have brought a return of $7,200, best case scenario. The option move, the $21.50 call, went from 1 cent to 73 cents. That's a 7,200% move. In this example, NBEV, the stock move is $9.99, covered at $5.71 for a 43% gain. On the option move, NBEV $7 puts at 15 cents you're out at $145 for an 866% gain. A $105 investment in the morning by that night would have turned into a $910 gain. So I'll show a little bit more of this here in a minute on a live example. I do have my Thinkorswim brought up, and futures are moving, so I'll show this again. But it's nice to just look at these still examples here. So this is the option trade where the trades are executed, and this is on Thinkorswim platform. I know on Robinhood a lot of you guys use to trade options. It's a lot harder to see this stuff, so I definitely recommend, even if you're trading in Robinhood or Webull, one of the free ones, I would definitely recommend downloading the platform of of Thinkorswim just so you're able to see these option chains a lot better and it makes more sense. And I know when you first open this up, it definitely seems very confusing, overwhelming. I've heard all of those, and I was there too, you guys. I totally understand. So we'll try to give you the 101, if you will, on how this kind of works and what the setup is. So right here, the expiration, March 9th, 2019, at this point in time, there would have been 6 days left until expiration. This is a weekly contract, and these expire every week. Over here on the right-hand side, this is the implied volatility. And one really nice thing about Thinkorswim is that they actually show every week that is listed and monthlies. They'll show the implied volatility. And this changes, obviously, guys, all day long, every day. Right here, this little number, this is the expected move that they expect this stock to move by this date, March 29th. They expected this to move $86.59. Now, that doesn't mean in one direction. This could be up, this could be down. We all know that there's no way of actually, anybody to know that, but they do. This is back tested, I believe, over 20 years of data. So this is pretty close, and it's unbelievable on large caps how accurate these numbers actually are. So the expiration, every option expires on a specific date called the expiration date. Most contracts expire every Friday with the exception of ETFs that can have expiry dates on Monday and Wednesday also. After expiration, every option that was not closed or exercised becomes worthless. So implied volatility and its expected move, that was what we just kind of showed here. I'll go over this a little bit more with the live example in Thinkorswim here in a minute. So when looking at the option chain, this strike right here, this is the strike price. So these are all the different available strikes. And you can see right here where it has chosen 10. Depending on how you play, you can set this up to 2, 4, 10, 25, 80. Then there's one that says all available options. Obviously, for the most part, I keep this under 24, but that just depends on also your portfolio and your account size and that kind of stuff. So looking at this, what they've highlighted here, these are OTMs, or what we call out of the money. So at the money, what the stock price is trading at will usually be right in the middle here. Sometimes, depending on how big the spread is, it won't be equal on both sides. So this is an out of the money strike, and this would be in the money. So it's already above this price, if that makes sense. And then on the other side, so this would be essentially, these are the same thing is what I'm trying to say. It's just one is for calls on the left-hand side and one is for puts on the right-hand side. And again, I'll go over this with live examples here shortly. So in the money versus out of the money. In the money, options have a positive intrinsic value. For calls, the strike price is less than the stock price. I'm sorry. For puts, the strike price is greater than the stock price. Out of the money options have a 0 intrinsic value. Out of the money contracts they're cheaper because you are putting on more risk of these expiring worthless. Keep in mind that all options eventually do go to 0. For calls, the strike price is greater than the stock price. For puts, the strike price is less than the stock price. One point I want to make here also is that when deciding on to buy an in the money, out of the money, or at the money strike, the big difference I find, and I've been asked this several times with a few of the guys that I've been mentoring over the last couple of weeks, is why buy this, X versus Y. And the big thing is that if you're day trading, there's not necessarily a reason, depending on your account size, to do that. Now, there are a lot more complicated parts to this with delta and theta and all the Greeks, and we will get into that a little bit here, but definitely in the more advanced webinar we'll go over that a lot more, because when you're day trading, honestly, it doesn't really matter as much, and I say that with a little asterisk on the side, because it does matter on decay and stuff like that, but intraday it's not going to make as much difference. They're going to move relatively the same. Now, that's not true always, and again, that's more of an advanced topic that we will get into eventually. The strike price. The option strike is the fixed amount per share at which the option can be exercised. Exercise means buying 100 shares with a call or selling 100 shares with a put at the fixed strike price. And in the 8 years that I've been doing this, I think I've only exercised, and this was voluntary, one time. Honestly, you guys, you're not, and especially if you're day trading, you're not going to be exercised unless perhaps you're buying on expiration day and you're just not paying attention to it. That could happen. Volume and open interest. So this is a key component in deciding where you're going to buy. So right here, you'll see it says open INT. That is the open interest. On the left-hand side, this is the volume, and this is how many of these are being traded. One of the things I really like to point out to new guys is that if you go over here and you see the volume on, say you go way down on these strike prices and it says 0 or 2, you might not be wise to purchase that strike price, because yes, if it moves huge in your favor, someone's definitely going to want to purchase that. However, if it doesn't move a lot, you're going to be stuck with that and it will expire worthless. So that's just one little thing I want to point out right there. So importance of volume and open interest. Make sure to check volume and open interest in the contracts on the option chain before buying an option. You want to look for the most popular contracts that people are playing so that it's more liquid and easier to get in and out plays. You don't want to get into a play that nobody is playing, then who are you going to sell to? And that's what I was just explaining. So what is volume and open interest? Volume is the total number of contracts bought and sold for the day. Open interest shows you how many contracts that are currently open. And a quick tip they put here is look at the volume for the day and check back the next day to see how many contracts of that volume gets added to the open interest. That will show you how many contracts people are holding and own right now. So a little bit into the Greeks here, delta and theta, and these two are going to be the most important, not saying that the others aren't, but right here on Thinkorswim, you will see under the calls, delta and theta. Here's your delta numbers, here's your theta. So essentially how you use delta and theta, delta tells you the gain or loss per dollar move. If the underlying stock goes up or down $1, the contract is going to lose the amount that's shown under delta. As the contract gets closer to in the money, the delta goes up because it is showing you the contract now has more value. Theta tells you the time decay and how much the contract is going to lose over time. So let me go back just so you can see this. So essentially the way I do this, so delta again is going to show you how much this is going to move up or down per dollar move of the underlying stock. A little kind of easy way that I like to look at potential gains or loss. So say it's trading right here and I see that this contract is worth 49 cents. I like to say, well, if it goes up, let's just say 2 notches here for this one, essentially you would know that it would be worth 54 cents. Now, that's not 100% accurate. This is just a general way of kind of being like, okay, this is how much it's going to actually gain. What is break even? For options trading, the break even point is the market price that an underlying asset must reach for an option buyer to avoid a loss if they exercise the option. Example, a stock is trading at $100. You buy a $105 strike call expiring on 3/1/19 for $5. So in scenario 1 on 3/1/19, the stock is trading at $105.01. If you do not sell your contract before expiration, your option is automatically exercised because it is greater than or equal to 1 cent in the money. You make $105.01 minus 105 times 100. So $1 profit off the exercise of the option, because you can purchase a $105.01 stock for $105. However, you paid $5 for that option, so your $1 profit minus the $5 premium you paid equals a loss of $4. You did not break even. And again, that brings me back to the point I made a minute ago about that when we're trading, most people are trading these intraday. A lot of people aren't swinging this. I do, but the thing is it depends on your account size and your comfortability. I've been doing this for quite a while, so I'm a little bit more comfortable swinging and holding on to them. This doesn't matter as much when you're just intraday trading, so just keep that in mind as we go through some of this. So practicing first with TOS on demand. And if you guys were here last week on the webinar, I kind of went over what on demand is and how you use it to do back testing. One thing I would definitely say, I know a lot of people are either hate or totally against paper trading. The thing is if you're going from playing small caps and you're just jumping right into options, I think it's very unwise to not open a free paper trading account on Thinkorswim. I think it is the best way to get your feet, so to speak, wet and dip a toe in. So even if you only do it for a couple of days, a couple of weeks, a month, the thing is that you're going to get that real world feel, at least for how this actually moves with the underlying stock. Otherwise, it is overwhelming, and so you're going to find yourself getting stuck or caught, and you don't want that to happen. You know, when you're risking this much money, even if it's a little bit of money, you don't want to lose any kind of money. So I just heavily recommend that you definitely start with a paper trading account on Thinkorswim, at least to just kind of get used to the whole new concept of options trading. Choosing a contract. So, and I'll show you guys this here on a live example in 2 seconds. When you go, after you right click and hover over buy, it will bring up a list of different ways you can play the option. For beginners, the single is just a naked call or put, meaning you believe the price is bullish. Put, meaning you believe the price is bearish. And I'll go over this obviously a little bit more. I just want to kind of get this information out to you guys. And also this PowerPoint and anything else that we have and much, much more is always going to be available in our Discord and on our website, which we will be launching this week in full force. And what's really nice, I think, about Thinkorswim, compared to a lot of other ones for options, is that when you right click over these, it actually will set these legs up of the option trade for you. So you just click on these and then literally you just set in your values, and it makes it so much easier than you having to try to manually figure all of that out. And again, I'll show you here in just a moment. Okay, so let me, yes, I'll close those. Okay, so here is, I'm just obviously always 24 hours a day, I'm always watching the market, and we're just watching the futures mini right here. So when you go in Thinkorswim, this is the active trader. You just go to all products here on the upper left under monitor and trade. Let that load, and here's the options chain. So for now, I'm just going to go over some basic stuff, you guys, and then we can answer some questions and all that. So I'm just going to click on one of these just kind of show you. So you see how that opens up, and then this is what we were talking about. So these are in the money on the calls. These are in the money on the puts, as here is the at the money price as of right now. And as this changes throughout the day or minutes, this will continue to change with you, and it just highlights it to make it a little bit easier to understand where it is. These are the ask price and bid price. So in here is your spread. So right now, and of course, because what time it is, this one is 7:50 and this one is 8:30. Here's the change from previous close, and this was the last price paid for that contract. Same thing on the put side, it's exactly the same. So you'll notice, so just look at these prices, 755.80. So now, say we'll go down to like July 19th, you can see how humongous the change is suddenly, because your theta decay on there, it actually speeds up as it gets closer to expiration. So for sake of what we're doing right now, if you buy a call and it's for this weekly expiration, it's going to be relatively cheap as compared to if you're buying way out, you know, clear here in a few months. It's gonna steeply increase. However, you have a lot slower decay on that price, so you're not being punished as quickly, so to speak, as you are on the weeklies. And there's a lot of guys you'll hear out there that are just totally against weeklies, or they you know, you're going to hear a lot of noise out there. That's why we're trying to bring this to you guys, to try to give everybody a little bit better of a basic understanding. And then, like I said, we'll get into more advanced stuff as we go. So some of the other features that I like to show in here are the statistics. I cannot talk today. Jeez. So if you look at here, they'll show the IV high and low where it's been, and then the current implied volatility percentile, which is 48% as of right now. So here are all the analysis of the numbers. So the total volume of calls traded was 275,977. And the puts was 203,365 for a total of 479,342. The main reason I bring this up right now is that I don't want to see new guys getting caught or stuck in, let's just say, a stock or product that there's only, you know, such a small volume that it's not liquid. That's one thing that we definitely, and I know the other guys would agree with me, that we don't like to be stuck in a position if we don't want to be stuck there. And so we only trade, for the most part, very high liquid stocks. So being, you know, the Boeings, Apples, Facebook, Google, things that even you could ask anybody on the street and they would know what those products are. These numbers are what you want to see. You want to see stuff like in these ranges. Now, on some of them, like say AMD, GE, because the strike price is so much lower, there's going to be a massive volume on those, for better or worse, as opposed to something really high like Amazon, where it's going to be a lot less. And it just depends, again, on how you trade and what you like to trade. The time in sales, it basically works the same as like an underlying stock for traditional intraday trading. This is where it starts to get overwhelming. And honestly, you guys, at the beginning, I don't really see a huge need to get too far into this right now. We will get into this more later on, especially for advanced topics and for selling. Product depth, this again is another very advanced tool. Now, it is simple in its concept, but again, I just wanted to kind of show you guys what is all on here, and we will get into that later on. So 1 second, I want to bring up a couple of things from this past week. I traded this week. Obviously, Boeing was the big news. If you want to say, Facebook had a lot of news. It just happened to be coincidental that they both were on the downside. But if anybody was in those, you know that it did not do what a lot of people thought, and they instantly bought the dip, so to speak, and started to buy back. So give me just a moment, and I'm going to pull up the on-demand for Boeing for this week. So just 1 second, guys. Okay, so back on March 11th at 8:30 in the morning, and this is going to be Mountain Standard Time because where I'm at. So the market opened here basically in the high 370s, low 380s. I believe the news came out. Does anybody know what time was the news? I believe it was the next. Was it? Because the news came out over the weekend on Saturday, I believe, about the Ethiopian flight that went down. So let me try to find... Well, I'll just go into what I was going to show you guys. So we go into the all products, and we go ahead and open the option chain. And I'm just going to pick up a weekly here. So you can see when I start to scroll over these how it changes the little icon underneath. You can see it now says buy. I know that's kind of hard to see probably on your end. Then I go over here and it'll say sell. So that's if you're selling the contract, and this is if you're buying. And for right now with the 101 style, we're going to just buy. So then the order tools pop up here, and this is where you can start to change. So this right here is essentially where you can set your limit price for how much you're willing to pay for one contract. And depending on how fast you think it's a move or how big it's going to move, you can get more depth into that. But I'm just going to keep it here at the ask at 925. You can see right here, here's your expiration date. Here's your strike price. This is the type of contract. So you can see when you open it, call or a put. Here's the price that the option is trading at right now. You can see here that says LMT for limit. And then again, it will confirm right here under your order that it is a limit. And you can see that when you click on these, it opens market, limit, stop, stop, limit. But for right now, I'm just going to keep it on limit. And then right here, it's day or GTC, which is good to close. Instruction, we won't get too much into that. Exchange, I depending on how I'm trading, I usually leave it on best, but you can get more into this, especially on certain underlying stocks. You'll want to change some of these. Again, this is a little bit more advanced, and when I say that, you guys, I'm not saying that it's some crazy wizardry. It's just that for right now, we just kind of want to get people situated with what any of this even means. So right here, again, on the left side, will show the type of, the spread is the type of play that I'm making. And right here, I've just got it on single. But this, like I said, you can add legs to it for iron condors. I mean, there are so many types of option trades. But for right now, again, we're just going to keep it simple. So here is the number of contracts you can purchase. Because of my account, I have it set on 10. You can actually reset all of these to how low you want it to how high you want it. And then you notice now that I'm at +1, if I keep clicking on this, it'll actually go automatically now down into a sell. So I'm going to go ahead and go back positive. And then you basically just check everything, make sure everything's where it's going. You can add legs, all of that. So for now, but then I'm just going to confirm and send. It'll bring up the dialog box. Make sure that all of this is exactly where you want to see it, and then hit send. Now, obviously right here, it's going to probably automatically send to me. It's almost like paper trading. And that's the biggest thing that I need to explain to you guys about the paper trading account. If you do and when you set one up, when you go to buy or sell a contract, no matter what usually the volume or open interest is, it will execute it almost 100% of the time. That being the big issue with paper trading for options, is that it gives you somewhat of an unrealistic probability of what trades are working and won't work, because as soon as you buy it or sell it, it's going to execute. In real life, if the open interest is not there, you might be dangling for hours or days, or it will never execute. So that's just something I want to point out a little bit in there. So this is as simple as it basically gets. I know it was a lot to just throw really quick. I'm not trying to rush. Again, we have a very good options page in our Discord community. We're always available. I've actually been mentoring about 4 people over the last couple weeks. One of them has already moved on to live trading, and I'm super, super proud of them. You know who you are. And we will get into more complicated stuff. So is there any questions about essentially how the option chain or what any of these terms are? I'm just looking back through the comments, guys. Okay, so Nick asks, what is good volume for options? That's a relative question, because like I was pointing out, so if you're playing like AMD, which I believe literally is in the top 10 for volume played every single day of the market, there's going to be massive, massive volume as opposed to like an Amazon or a Booking or a Google, that because of the much higher underlying price, there's not going to be as much volume. Quite a big difference. So I would say it's more of a relative thing to the stock you're playing. And I would basically, this is my rule of thumb. Obviously, I have my chosen few, but as we all kind of do in our options group. But the big thing I always say is, do I know this company? Are they going to be here in 5 years, 5 days, 5 months? There, a lot of times you'll notice on the implied volatility numbers, the reason they're so high. So like, for instance, all of last year, the weed stocks, their implied volatility was massive. The reason being is because there was a lot of people in the market that didn't really believe that these companies were going to be profitable or that they would last. And I'm not one of them. I actually use that implied volatility to my advantage. How concerned are you about theta? So theta to me is very important, but I also swing 95% of my option contracts. So for somebody like me who is going to be swinging them, it is very important to understand how theta works. For most people that are trading them intraday, it's not as important necessarily. And again, these all have asterisks every time I'm saying these, you guys, because there's so many examples to prove me wrong or prove me right. But theta is more important basically if you're a swing trader and playing these out longer, because at the day that you buy it, it's not as it's a slow decline. But as you get closer and closer to the expiration date, it actually speeds up. And theta can absolutely kill your profits, because say you buy a contract 2 months out and everything looks good and then it turns on you. So you hold on to it and you're waiting and waiting and days are going by and it's now a week till expiration and all of a sudden the trade starts to go your way. Well, that's great. And it might look like you're going to get, you're going to be profitable on that trade. The problem is with that rapidly declining theta, you're actually going to end up either maybe breaking even if you're lucky or actually going in the negative. So again, theta is very important for swing traders or somebody more like my style of trading, but it's not as important for that day if you're playing intraday. So that's about the best way I can explain it. What IV should we be looking at, higher or lower when buying calls? So implied volatility to me for selling, and I do a lot of selling, you guys, is really important. I actually look for a low implied volatility for selling. And the reason I say that is because I want that consistent money, and you can't be greedy at that point. You basically have to just be happy with, the smaller amount but less risk. And so I don't want a huge amount of IV that could crush me. But on the other hand, when buying, it's actually really nice if you get into a contract with low IV that suddenly, for whatever reason, a news catalyst or something like that spikes, because all of a sudden it is going to increase the value of that exponentially. So again, it's a relative question depending on what you're looking at. But I mean, for the most part, I would say between 20 and 40%. But when you get close to, like, let's say like we just got out of earnings seasons, well, technically we still have, another couple weeks. It seems like they never end when they start. But so the IV on those are going to be a lot higher than, say, a company that had their earnings come out 3 weeks ago, a month ago. So that I hope that makes sense. I'm trying to answer that best I can, but again, it's relative per each underlying stock. What do they mean when they always look for delta? So what they're saying is that when you look in the option chain here, delta is going to be how much this is going to change per dollar amount. So right now we're, and this was back, you guys, a few days ago, remember that, on BA, on Boeing. So the strike was 390. So what they're saying is right now this contract is, you're able to purchase this for 945. So if the stock here moves, let's just say up to 392.50, that will change. It will be worth 825. So it starts to go the other way. And let me actually open, let me get out of on demand. I hate when on demand does this. It starts to slow down. So 1 second, guys. Okay, so on the E-mini futures right now, they're trading at around, well, it's 28, 26.50. So essentially, you can see that these, because the number's so large that they jump, there's quite a large spread between these. So right now, this contract would be trading for 450. So what I say is when they're looking for delta is that if this moves up, let's just say to the $5 in this, it would be 28.35. Instead of going down this way, you would assume that this number would become this number. So that's not 100% accurate. That's just a good way to gauge at what it will be worth if it goes up that $5. So when they're saying to look for that, they're just telling you to understand how much this could go up, being your delta. So that's kind of that's a pretty basic answer for what that means. How much should you have to start option trading, and what's the best broker? So dollar amount, I mean, you know, depending on, you know, what you're planning to do with it. I mean, if you're just trading to kind of learn or have fun, that's one thing. If you're trading for income, I mean, just to start, I would say probably, you know, you could start with just a couple $100. I mean, you could start with $10, just start with $1 essentially, really, because you could buy a contract. But is that going to get you anywhere or last very long? Probably not. I would say minimum probably like $200. Honestly, it's best to start with more, as we all know. That's a pretty lame answer. But $500, $1,000 is actually going to get you to where you can, you know, actually move. And then the best broker, I am a huge Thinkorswim and Tastyworks guy. Now, a lot of guys that I know, what they do is they use Thinkorswim for the charting and for the option chains, but they're actually using Robinhood because of the free commission. So there's a number of ways of doing that. But if you're going to use like, well, Webull doesn't have options, but so if you're going to use Robinhood, I would highly recommend having Thinkorswim as your charting and option chain guide. I hope that kind of answers that. I'm trying to think of any of the other ones that I just don't use them as much. I've been on Thinkorswim for 8 years, so it's hard. I love Tastyworks also, though. And I don't really have a problem with Robinhood other than they make it kind of hard to really analyze the trade that you're in. But, I mean, that's what Robinhood is. So I would definitely say have Thinkorswim as your charter. How far out of the money would you recommend to purchase when playing weekly, monthly, or even swinging a trade? So if you're playing intraday, out of the money, if you're really feeling confident that it's going to move in your direction, you can go just about as far out as you know, with open interest to make sure that there's someone to sell back to later. So you really can kind of go as far as you want. I mean, you know, you don't want to go too far out again because you lose open interest. But on a swing trade, especially when it's a longer expiration date, I actually end up buying deep in the money. And the reason I do that is because the delta and theta, the numbers work out to be a much better risk management, because the deeper in the money, the slower that it will decay, if that makes sense. Really? I did not know Webull has options now. That's fantastic. Awesome. Man, they are really stepping up lately. That's great to see. Tastyworks is fantastic. I absolutely love Tastyworks. I have 2 accounts, and my other account is in Tastyworks, and I literally absolutely love it. And the reason being is because the guy who designed Thinkorswim, well, one of them, he's actually went off when they were acquired by TD Ameritrade, and he actually made Tastyworks. And it's actually the guy on Tasty Trade on the YouTube channel. So they're fantastic. Yeah, yeah, Tom. Yep. Yeah, Tom is the man. Nice, Ryan. That's great. Started with a 500 in trade account and 1,000 in IRA. That's fantastic. I've actually, anybody that knows me and that's been watching in our Discord chat, they know that I've been trading exclusively 2019 in my IRA. It's something that I put off for a long time, and I didn't really understand the specifics, and so I really stepped up. I told myself in December, with everything being so crazy in the market, especially after the Christmas Eve crash, as I like to call it, I decided to start to trade heavily in my IRA just so I had something there for later on. You know, even though you can't technically touch it without being taxed, I just love the tax-free trading. So any reason to buy something other than same week options for a day trade? Yes. For the most part, depending on your account size, no, if it's smaller. But yeah, there is, because as you notice, so like right here for this weekly, we'll look at the same strike price, 28.30 on this weekly. Well, it just changed as I'm talking, but is $4.70. As we're, let's go down a couple months, we'll go to May. And that same strike price of $28.30 is $52. Now, you would say, okay, well, great, but won't it just still move the same percentage? No, it actually will have a different delta and theta, and those are assigned, and it's a long, complicated answer. But basically, if you can afford to, even when it's intraday trading for me, I still buy a little bit farther out because it doesn't decay as fast. I hope that answers that. And there's a lot more to that answer. It's not as simple as I just said. But I'm just trying to kind of get you guys, orientated. So sorry to be kind of half answering myself and then saying, oh, but there's an asterisk there. So what time frames for option chains do you prefer, weekly, monthly? So honestly, I used to be one of those guys that just said, oh, don't play weeklies, that's gambling, blah, blah, blah. So I still do try to stick with monthlies, and it's usually for me with the swing trading and the durations of my trades, it's because of the open interest. A lot of, smart money, as they call it, and the bigger guys, the trading firms, hedge funds, they're going to be, and you can actually see this in here, and that's why we were kind of showing you that earlier about the statistics. When I open these up and I want to see the open interest, I actually like the monthlies a little bit better, just because I know that even if the stock goes against me heavily, that I still somewhat should be able to get out of it if I give myself enough time. I hope that answers that well enough. Yeah, nothing but FD YOLOs, no kidding. Yeah, Thomas is right. You get more bang for the buck. That's absolutely true. And that's how I feel about options in general. I'm not sure if that's what he's replying to, but yeah. And you guys, like I said, this is just a little bit of a basic, dip your toes in. We will have very soon getting more and more advanced. So basically, if you're with us now, I'm trying to basically every week, I want to kind of up this a little bit more and a little bit more to the point where, let's say, in best case scenario, in a few weeks, I would love to be actually doing this during the day. And so that way you guys are actually seeing it, because it's one thing I can go back and show you trades and it kind of makes sense, but there's so much emotion that is lost that it's a lot easier to grasp as it's moving along. So that's one thing I'll definitely say again is definitely, if you're not already, join our Discord community, because we're actually very, very active, especially in the options room, about calling out what we're doing and just kind of explaining in the moment why we're doing that, what we're seeing, where the sentiment goes. And we have traders that are trading on every different type of strategy. As for like me, I'm a fundamental guy, a macro options trader, but I started as a technical guy, so I still use TA basically to confirm my trades. As where we have guys that trade purely off of sentiment in the market, we have momentum traders. There's a lot of different strategies for options, just like there is in regular day trading. So. Why is the contract price different than the option price, and how do you view the contract's price on a chart? Diego, so what the reason that it's different is because so for this strike price of, let's say, 28.25, this price right here that says $8, what that means is you're paying $8 for the contract. A contract is 100 shares of this underlying stock. So the reason that it's different is that you are essentially buying or selling the idea of it's the insurance. That's basically what an option is it's the insurance for the underlying stock. And there's a lot of people, especially bigger guys, that what they do is they actually use options as a hedge for their actual underlying stock plays. Tim, yes, this will be on YouTube later. We're going to be trying to come out with a lot more content as we go. I mean, like we said, we just kind of got this really, I mean, Arian's been putting up the scanners for a year now, but we've just kind of started really deciding to try to help people and get out some education and using the Discord community as a way of communicating with everybody in real time. So we just started doing this a couple weeks ago. So basically this is the very beginning. So if you're here now, we're basically going to just keep moving forward with more and more educational content and webinars, and we'll get deeper and deeper. I know for a lot of you this is pretty basic, but there's people out there that didn't know any of this today. So that's kind of the reason we're doing this, and we will be putting out more actual videos, like actual educational videos, not just the webinar where it's more freeform and just kind of winging it kind of thing. So yeah. Yeah, MU this week. What did you purchase? Hey, what's up, Donald? Good to see you, man. Yeah, you were one of the guys. We have about 4 or 5 that I know that are international, and you were one of them that I knew that it was going to be really late for you guys, and we apologize. It's just, I mean, it's so spread out because like our guys in California, it was like 4 o'clock, and so yes, this will be on YouTube. You got a 40 call for Wednesday. Of course, I'm not gonna be a financial advisor here, but you know what? I'm going to say that I would take the same trade. There you go. That's the best way I can put it. I would take that trade as well. And I might be, actually. I didn't take any. I'm actually completely out for the first time in months. As of Friday, I had huge internet issues, so I actually ended up selling and buying back everything I had out. Yeah, it's going to be interesting to see their earnings and their guidance. I'm very, very curious. That's definitely one of those companies that I definitely stand behind. You guys were talking about MU, about Micron. So, yeah, that'll be interesting to see. But, yeah, that is definitely a trade I would take. Apple has an announcement on the 25th. Have they said any more than that, or is that just like a little dangle of fruit? Does anybody else know what Nick's talking about? Apple has an announcement on the 25th. That makes me very curious. Oh, you know, huh? Yeah, I'll definitely be doing more research, but no, I really appreciate that. You guys, and that's the other thing, like what he just did, we're doing this all day long in our Discord where we're posting news and sentiment and events that could possibly make or break your account. So, interesting. AirPod 2s, huh? Yeah, I do the same thing. I don't know if I would want to. Yeah, don't end up like Tesla. Yeah, I do that a lot too, especially with earnings. This year was one of the first times I actually held all the way through earnings on a few of them. Usually, what I do, because the IV just ramps so high pre earnings, I will buy, a couple weeks before, knowing that's going to happen, and then I just wait till that just starts ramping up and sell like the day before. So I very rarely hold through earnings. Yeah, the booking trade was nuts. Yeah, TV service that could be huge. That could move that stock. That could fly. If that's true, that's very interesting. That's awesome. I'm not saying that it's not. I just don't know. It's the first time I'm hearing of it. Does Thinkorswim have hotkeys? And if so, how do you activate it? It does. It's not going to be like Lightspeed, where it's more built for scalpers and Momo traders. I actually don't use hotkeys, but again, that's because the way I trade. But I believe it is in the. Hold on one sec. Yeah, shift click. Thanks, Ryan. Yep, that's right. Yeah, exactly. Like as Nick just said, TOS hotkeys suck. And you can sit there and customize them, but I found that there's a lot of issues. Like when I tried to do it before, when I was doing small caps, a lot of times it would, for some reason, it would just like, I would have it set at 1,000 shares to buy, and all of a sudden I would hit buy, and it would all of a sudden be selling me 3,000 shares. And I know I've seen a couple of other guys. I think it was Ross Cameron from Warrior. He trades on Lightspeed, and he had that happen like a couple months ago. And I had that happen on Thinkorswim a few times. It was really weird. Yeah, Thinkorswim is not for scalpers. Yep, I would agree 100%. Yeah, super basic, exactly. What do you think of Netflix? They have earnings. I love how everybody for the last like 4 years has been kept saying Netflix is dying, and they just kept going up. Like that really, really cracks me up. It's always the end of the world. If you guys haven't noticed in the market, it's always going to crash. We're always going to a recession. For the first time since I've been trading in 8 years, because you got to think when I started was right after the actual crash. They've been saying this, but this is the first time I've seen where it really truly, it looks like there could be a recession next year. And as options traders, one of the best parts about that is we don't really care what direction the market goes. We just need it to go in a direction. Now, when it's flatlined and choppy and staying in the middle, then that's when I just sell premium the whole time, because I don't have to care if it's moving up or down. It just stays in the middle. I'm making money. But when buying contracts, either way, it goes down, we make a lot more money technically, because when things drop, they go a lot faster than when they go up. When they go up, it seems they have to grind. I'm staying away from BPTH. It scares me. I don't know. Does it? I don't think it does. Let's look. That's a good question. But yeah, the Netflix thing. Honestly, I may play it, but I'll probably play it up to earnings. I don't think I'm going to hold either way going through earnings because of everything that's gone on this last year, especially in the last quarter. Netflix is a hard one to gauge for me. Netflix is very volatile. I don't know. If you're in our Discord, well, yeah, there are no options in BPTH. There you go. Aurora Cannabis. So this is one of the few weed stocks, if any stocks, that I actually have a long-term investment in. I bought it back when it was like $4. I think Aurora Cannabis, with all the positive sentiment, is going to continue to rip up. I believe I just saw that Jim Cramer upgraded it, which, not that I'm a Jim Cramer fan in any way, but that means that the industry is talking about them. I think they're undervalued compared to their competition. So yeah, from a fundamental aspect, I truly do believe in Aurora Cannabis. I don't know. I think we actually had this talk in Discord on Friday, because it actually jumped up like pretty good. I'm bullish on Aurora. Yeah, Afria also. Yes, very good. I used to watch Grandma's Show all the time. Yeah, me too when I was younger, especially when I first was getting into it. That's actually one of the reasons I kind of got into this. Nice. That's great. Yeah, ACB is a great company. There's great fundamentals there. And honestly, as more and more states start to legalize, it's just going to go up and up and up. And they're one of those companies that's not looking just at the United States. So, I truly believe in their fundamentals. Yeah, T-God, definitely like T-God. I think they are a fantastic company as well. They've been very smart with who they're bringing on in their HR. That's a great company. I'm not sure of Hexo. I don't know that one. Nick, do I do future options? Yes, but honestly, because of the market over through 2018, I haven't been trading them a lot lately. It's been how's the best way I can put this? There hasn't been enough reward to my risk. But yes, that is definitely the problem with futures is that same with like trading the SPX as compared to the SPY, they're so expensive that it makes it really, really daunting to just jump into them. Especially the SPX is absolutely terrifying. I mean, because yes, there's huge win reward, but the risk is massive. Yeah, Patrick, I actually wrote it down on my notepad. I will definitely check them out after this. I'm very curious. Yeah, I saw a lot of guys on Roku last week. I can't remember his name. The guy that runs Boiler Room on YouTube. He shorted them and made a nice little chunk of change. And I actually played Roku a couple weeks ago. But I don't see. Here's the other thing, you guys, with options is I don't recommend jumping around from company to company because what happens is you're following the noise, and usually by the time you hear about it like that, it's already too late to really make the real reward out of it. So what we recommend, and this would probably be all the guys in our options room, is that you basically you eventually through time you come up with a handful of companies that you watch, and those are your plays, and that's exactly how we are, and that is how I am now. Yes, I will if some, like for Facebook, I actually don't usually trade Facebook, but because of all the negative news last week, I watched it enough and I see it enough that I do know the levels. I like to be comfortable in the levels to know where it's going to even move, or you're just basically throwing a dart at the wall. And so on Facebook, I did actually purchase puts, and I came out very good, but was that risky for me? Yes, because I don't know that stock. So we like to tell people that, especially when you first start, don't just pick a bunch of companies, like 20 companies. And the few companies you do pick, like 2 or 3, make sure there's things that you really understand. You actually know what the company is and does. Not that that matters necessarily to be a profitable trader, but it's a lot different from small caps where you don't even need to really know what the underlying company is. You just need to know that there was a catalyst big enough to move it. So in options, I like to know everything about that company. I know its level. So even when it rips super high or dips super low, I still know that it's going to fill that gap back up, or I know that it's going to come down, that it's way overextended. So we always tell people to kind of, stay within your means with a few companies that you really know. And I have my few, some of the guys have their few, and that way you really, really understand how it moves and where it's going to go. So that I can guarantee you that's how you will become much more consistent and profitable. GE or Ford for a long-term investment. Ford, I just, if you would have asked me a few months ago, I probably would have said something way different. I think Ford is kind of at a stand where they're at right now. I wouldn't be looking for a long-term investment on them now. However, the price is pretty enticing because it is so low, and I think I've heard some rumors about what they're planning to do, so I could see that once that's up, but I don't see that happening for a long time. So you're going to put a lot of capital into a company that I feel like is probably not going to give you a lot of returns very soon, but that's not to say that it won't completely change in a few months. GE to me, man, back in November, it would have been a great buy for an investment. They've gone up quite a bit for their price point, obviously. I'd be more, GE over Ford. There we go. I'll just say it. Our news, we don't have a news service, but we all are very, very active in the Discord community, and news is about 95% of what I trade on. And so, yeah, we provide our news to each other, and then we kind of discuss it in the Discord. Okay, you guys. Well, everybody, like I said, if you want to continue the discussion, please join our Discord. Come on over, ask as many questions you want. We can get a little bit more detailed over there. We will be having an advanced session probably next weekend, I believe, again on Sunday. I may try to do it Sunday morning if there's enough interest to do an advanced options walkthrough. I'm actually recording. I had a couple trades from this week, and I'll be recording a couple this week to show you guys in real time and go over more advanced techniques and equations and all that. But yeah, join our Discord. Let us know. Hit that like button. This will be on YouTube, and like I said, we join the Discord, and we will not let you down. So thank you guys all for coming. Really appreciate it. And like I said, stay tuned for bigger and better things. The next will be going over a lot more of indicators and the likes of that. So thank you guys again, and have a great night, everybody.